Hey everybody, this is Christopher K. Smith. This video should last about 20 minutes and we'll give you an introduction to the FibLines indicator. So first, a little bit about me. I'm a blogger, investor, active trader, IT guy, and fan of the financial markets. I've been trading and investing for the past 30 years. I have to say, in all the time I've been studying the financial markets, the FibLines indicator is probably the most exciting thing I've found in terms of identifying hidden areas of support and resistance. So in this presentation, we're going to introduce you to the FibLines indicator. We're going to show you how to draw the indicator, calculate the indicator yourself. I'll talk about why the FibLines work, how they work, and how they help in making trading decisions, and of course, how to get the FibLines, along with plenty of examples, of course. So Fibonacci, FibLines is based on Fibonacci, which is a mathematical sequence that's found all over nature and discovered by a gentleman named Leonardo da Pisa, first published back in the 13th century mathematician. And the sequence first observed how many rabbits you'd have after n months if each pair produced one new rabbit each month, and the rabbits were productive after the first month. So taking a look at the sequence, this is the raw sequence here. Through some miracle, you had two rabbits at this point, a male and a female. They got busy and had a baby. You had three rabbits, a male and two females. They got busy, and each one of the females had one more baby, and you had five, and so on and so on. The sequence continues. So notice that each number in the sequence is the sum of the prior two numbers. So here, in this case, 2 is the sum of 1 and 1. 3 is the sum of 2 and 1. 5 is the sum of 2 and 3, et cetera, et cetera. So the numbers themselves aren't important. What is important is the ratios. So you'll notice that the ratio of the lower to the upper number is 0.618, and the ratio of the upper to the lower number is 1.618. And these numbers are called the golden ratio, and they appear all over the place in nature, and it turns out in the stock market as well. Here's some examples of Fibonacci in nature. You have the shape of a conch or a spiral shell follows the Fibonacci sequence. The spin of a hurricane follows the same basic pattern, the Fibonacci spin, the golden ratio. And of course, the same pattern appears at the largest level in the spin of a galaxy. So this is an example of what they call a fractal pattern in nature. It's a pattern that appears similarly at many different time levels, at both the smallest and at the largest level. Here's another example of Fibonacci in nature with how many branches you'd have. At each node, you'd have start with 1, then you have 2, and then you have 3, 5, et cetera. So this is another example of Fibonacci in nature. And there's plenty of other examples. The ratio between the size of your hand and the space, that's distance from your elbow to your wrist, it also follows the Fibonacci sequence. It's all over the place in nature, and as you'll see, all over the stock market as well. So another concept you have to understand for FibLines is called Elliott Wave. And Elliott Wave was named after a gentleman named Ralph Nelson Elliott, who observed the stock market unfolds in an 8-wave structure with 5 waves up, 1, 2, 3, 4, 5, followed by corrective pattern, 3 waves down, A, B, C. So that's the complete Elliott Wave sequence. And it's also a fractal. It appears at the on monthly charts as well as intraday charts. But it turns out it's not that useful for working in the stock market because there are many ways to interpret a given chart. And a lot of times it's revisionist. You wonder, are you in wave 3? And then based on something, well, you have to pull back to different time frames. It's just not that helpful for predicting the stock market, but it is helpful to understand the concept for FibLines, particularly this wave 1 here is really the most important thing. So the aha moment is when you realize that the stock market unfolds. As the stock market unfolds, there are areas of inflection, support or resistance at multiples of the Fibonacci sequence. So you might think of future price action as just a smooth line. The prices can be evenly distributed across any point in that line. It's really not the case. They're bumps or inflection points in the future, and that's the way the FibLines works to help you identify those areas of support and resistance in advance, so you know where they are, you know how to act, you know how you can read price action as stocks approach those price levels. Okay, so what does this have to do with the stock market? Let's take a look at Thinkorswim. And let's bring up my favorite stock chart, which is Facebook. And let's go to a daily. Okay, we can see that Facebook came public. Let me go to, this is the longest daily chart as I can get here. Let's go to a 20-year daily. Okay. So we see that the Facebook came public back here in May of 2012. It was a really disastrous IPO in the sense that the price was too high. It was twice as big as it should have been. The bankers made a lot of money. And the actual execution of the IPO didn't go well. It wasn't smooth, and the prices kind of traded down after that. Really found a bottom here and just a little bit of an ABC corrective pattern. So the first thing in calculating the FibLines is to find the Fibonacci retracements tool. And if you click Thinkorswim, it's the tool that looks like the little percent sign here. So make sure you have that tool selected. Then you want to pick what you think is the top of Elliott Wave 1. So in this point, in this case, I selected this point right here. You're going to click and you're going to drag down to the bottom. And that is your basic Fibonacci retracements move right there. So a couple of things you'll notice right away that are cool. One is that when prices gapped up here after earnings, the low of that gap is exactly right here at the top of the 100% move. Also, you notice that prices came up to the 161 level, got deflected back down, rallied back up to the 261 level, got deflected back down close to the 161, went back to 261, moved sideways for a little while, rallied back up, came back, hung out to 261 level for a while, and then moved up to the 423 and kind of moved sideways for a while. So that's what these lines, these are the most important lines in the sequence that have the highest areas of support and resistance. So the next step is to calculate the next levels of the sub-resistance. To do that, again, you draw a Fibonacci retracements tool between the 161 and the 100, and you go into the properties of that tool, you right-click on it, and you uncheck everything except for the 382 and the 618. And remember, the 618 is the golden ratio, and 382 is 1/2 of that. And here we're going to select, for colors, we're going to select orange. Some other people like to select green at this level. I'm sticking with orange. And we're going to do the same thing between the 261 and the 161. Properties of the indicator. Orange. Okay, and the same thing again between the 423 and the 261. Okay, so that's the way the indicator is constructed, and you'll notice that prices tend to deflect, find support and resistance around the lines. There's also a third level of lines, gray lines, that we take each one of these subregions and divide it again at the 38.2 and the 61.8% line. So that's the way the indicator is constructed, and it's a manual process in that you have to do it by hand for each chart. You have to figure out where Elliott Wave 1 begins and ends, and as you see, it changes over time because the price got up to the 423 and then something happened. It's a lot of work to do that, so that's where the FibLines indicator comes in. You can right-click here, remove all my drawings, and go to Studies, this out of the way, Studies, Add Studies, and add FibLines. Once, and you will see the FibLines indicator for Facebook. Okay, so back to the presentation. Some finer points. By default, when you're constructing the indicator, for bullish charts, the beginning of Elliott Wave 1 is usually the lowest low in the chart. For bearish charts, it also works in reverse going down, by the way. And for bearish charts, the beginning of Elliott Wave 1 is usually the highest high on the chart. We use candlestick charts and use the high and low of the candle body. So if it's a bullish chart at the bottom of Wave 1, you want to use the lower of the open to close. And at the top of Wave 1, you want to use the higher of the open and the close, the Wave 1 top. When you can't find a solution, get creative. And also works on the way down, as I just mentioned. We'll take a look at some examples in a moment. So when does it end? Well, the sequence could easily continue. You have 1.618. Again, it's the sum of the prior two numbers. So 2.618 is the sum of 1, 1.618, 4.23. Then you have 6.86, 11.09, etc. So why do we end at 423? When you think about it, if a move to 1 was 100% of the move, by the time the stock gets to 423, it's already made a 423% move from the top of its initial area of resistance. So how many people will hold on to a stock after it's made a 423% move? Turns out not that many. But so what happens when the stock gets to the 423% line? Well, going back to Facebook, basically what you have to do is pick a next higher level interpretation. And it's a fractal pattern, so while the relationship existed when this was the top of Elliott Wave 1, well, it equally exists as well when this is now the top of Elliott Wave 1. Now, you could have looked at this and said, well, you know, Chris, so why did you pick this top of Elliott Wave 1? Why didn't you pick this? Well, we can do that. We can go ahead and select our fib tools and drag down to the Wave 1 bottom here. And you'll notice something uncanny. It's that the numbers are almost exactly in the same place. They're very close. For example, the 161 is very, very close here to where where my 100% line was, and the 261 is not very far off from where my 161 line is. So the bottom line is drawing the lines takes some interpretation. Not everyone's, there isn't such thing as a right or wrong answer. As long as the prices obey the lines, that's what's really most important about it. But it is a subjective process. Okay, so that's the point, is the lines do change over time, and it requires human interpretation to adjust and maintain them over time. So just remove the drawing here. Okay, so that's FibLines. What about the downside? Well, it does work in reverse as well. Let's take a look at the crude oil. As we know, energy has been in a major bear market for the last year or two. So let's take a look at crude oil. And in this case, I found the top of Elliott Wave 1 right up here at about 110, and the bottom of Elliott Wave 1 right here at, or I should say the top being the beginning of Elliott Wave 1, this being the bottom of Elliott Wave 1 right here at the 90 level. You see the price is pretty much sliced right through the 161, the 261, came down here and found some support around the orange line, bounced back up to the 261 line, hung around for a while, got deflected back down. And you'll notice that prices just very recently here came to the bottom of the sequence, the 423% line. So actually I made a blog post about that, you know, is this a possible bottom in oil since we've come back to we've come full circle in terms of running 463% of the original move. So that's oil. Another good example is Twitter. Also been in a pretty major bear market. We can see as an example of the beginning of Elliott Wave 1 being the highest high on the chart, again using the high of the real body. This is where I figured Elliott Wave 1 ended. And it took some trial and error to come up with this interpretation, and your own interpretation might be different. But you'll notice that the 161 line did become an area of support over time. And you'll notice that this next orange line is where some support. So one of the kind of perils of fib lines going down is that you have the possibility of the lines going below zero, which obviously is not going to happen because the price are never going to get below zero. But what this shows in this case that Twitter, this is the 100% line, is 261 line is down here around $12.30, and the 423% line is below zero. So I guess you take that to mean that Twitter is probably going out of business, probably going away eventually. Agree with me, disagree with me, up to you. Okay, so how do fib lines help in trading? Well, number one, they give you an idea where the stock is in its life cycle. So the stock moves from the 100 to the 161 to the 261. You can tell where the stock is overall in its life cycle based on that. Stocks don't always end at the 423%. Sometimes they just move sideways for a while and need to be reinterpreted. They give you a place to take profits or add a position. So if you know where those inflections are, where you expect prices to pause or hesitate, you can take profits there. We can add to positions as they're going down if they reach areas of support. So that's one interesting thing is the fib lines are both support and resistance, and you know they seem to be contradictory concepts, and they are in a way. But I'm working on a way to measure how effective the lines are as support and resistance. I'll talk about that just briefly at the end. So they also prevent you from, they don't prevent you, but they give you a tool to help you identify areas where you could be buying at the top or selling at the bottom. So sometimes I fall prey to this. I see a chart and it looks absolutely amazing. It looks like it's going to head higher, and that's exactly the time when it's going to pause and take a break and consolidate. So it gives you an objective way to figure out where prices are in that sequence without just looking at the chart and guessing, essentially. Frequently asked questions, who's the intended user of FibLines? Would be individual investors for the most part. Is FibLines a trading system? No, it is a tool that gets added to charts to assist in trading decisions. Is FibLines a holy grail? No, it's not. It's just another tool that you use in trading, but I have to say it's the closest thing I found to a holy grail in terms of understanding why prices get to a certain point and then just stop. And it's worked so many times, it's uncanny. It's just amazing. I've seen it work firsthand many times. FibLines work better on some symbols than others. I would say yes. I would say they work better on stocks that are kind of fresh out of the gate, brand new IPOs like Facebook, where you have a bunch of participants coming in for the first time. I don't think they work as well on symbols that have been out there for a long time, with people buying and selling, coming and going. But it is interesting to find that they do seem to work well on indexes that are a combination of a lot of stocks, and they do seem to work across a variety of markets. It's pretty interesting. Okay, why do they work? I believe FibLines work because markets are made of people, and people, on the whole, act in repeatable patterns. So one way to look at it is kind of like rabbits. Let's say, you have somebody who likes a stock. They tell two of their friends, and one of those people tells two of his friends, or her friends. So it sort of unfolds in a similar kind of method as rabbits reproducing, where maybe half of the people go out and tell more, and half of them tell more, and stuff like that. Another way to look at it is how much price movement does it take to make you a seller? So, looking at Facebook, for example, I would say each market has a built-in constant quantity, a quantity that represents the amount of move it takes to bring sellers out. And once you know what that quantity is in the beginning and end point, you can predict, or you can project future areas of support and resistance. And it does work very well, as I've said. I've seen it firsthand work well many times. Okay, how do you get to FibLines? Well, you can visit my website at fibtools.com. It looks like this. You can also go to www.fibtools.com or fiblines.com. Will also all resolve to blogspot.com, this site right here. On the right side, you can see some videos. More than likely, you're looking at the one under this link here. And you also click on Store, and you'll come to the Sells store for FibLines, and I'm giving away a free version for Thinkorswim and TradeStation, and a paid version for $99 for both of those platforms. What do you get for that? Let's go back to the presentation. For the free version, again, available for Thinkorswim and TradeStation, includes the source code. For Thinkorswim, I didn't want to give you the source code, but there was no way to protect it, so you have that if you want to maintain the indicator yourself and the lines going forward. Includes support for DIA, SPY, IWM, the major ETFs, and their continuous contract futures equivalents. That is free of charge. The full version features, again, support for Thinkorswim or TradeStation, support for over 220 symbols, including the Dow 30, NASDAQ 100, major stock indexes, index futures, sector ETFs, and much more, including futures contracts, gold, oil, interest rates, dollar index. It's all in there. For a list of supported symbols, go over here to the website. You can click on symbols on the right side. So this costs $99 for 1 year. They may ask why you charge them for this. I mean, it's just lines on a chart, but it's a lot of work. The levels have to be calculated manually for every chart. And I've put many, many hours into this, and I know a lot of people who charge a lot more money for the same thing. And I think it's a very reasonable price considering the amount of time I've put into it and how valuable it is as a tool for finding hidden areas of support and resistance in the financial markets. And that's not the end. I have some future developments underway that I've already put some work into that I'll share with you at a future date. FibLines arrows puts arrows in the charts when FibLines get deflected off of lines based on bar patterns. FibLines calculator algorithmically determines how well or poorly the indicator works in a given chart and reduces it to a number between 1 and 100. And also scanning of FibLines symbols for trading setups. Each one of the indicators, including the free version, has a text file included that you can use to build a watch list and scan for trading setups based on bar patterns or whatever else you'd like to do. So that's it. Thanks very much for watching. If you want to reach me, you can email it at support@fibtools.com or visit the website at www.fibtools.com and visit the store. Check out the free version, check out the paid version. Thanks very much for watching. Have a great day and good trading.